who ruined Japan's economy. Now a double disaster is unfolding. A country that was once a guiding force for global economic policies, that made the most influential financial decisions after the United States. How could that country's economy suddenly start collapsing? And collapsing so rapidly that it even fell behind a developing nation like India? Is this merely a coincidence, or is there a deep, slow-moving story of destruction behind it? Japan, once the fourth largest global economy, has now slipped to fifth place. And the truth behind this decline will shock you. Today, we'll discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe so you get all our latest video updates first. So let's begin today's discussion without any delay. Japan's economy had been sluggish for a long time, but now that stagnation has turned into a deep crisis. When India jumped to fourth place last month, it wasn't just a story of India's growth. It was also proof of Japan's steady fall. According to a study, there are two main reasons behind Japan's current economic collapse. First, the decades-long 0% interest rate policy. Second, the same old policies that are now pulling the country backward. According to a report by Business Today, Japan followed a zero-interest loan policy for a very long time, both within the country and globally. The Bank of Japan ensured that borrowing costs remained extremely low by purchasing government bonds. The objective was to encourage people and companies to spend more, invest more, and boost the country's sluggish economy. But this very strategy is now backfiring on Japan. This policy gave birth to a financial strategy known as the yen carry trade. In this, investors borrowed Japanese yen at extremely low interest rates and invested it in countries or markets where interest rates were higher. In other words, borrowing at 0% and earning 5% or more elsewhere, it was like striking gold. Investors poured this money into emerging markets, US stock markets, and real estate. As long as the yen remained weak and Japan's policies remained cheap, the magic of the yen carry trade continued. But then the situation changed. In March 2024, when inflation began rising in Japan and the value of the yen started falling sharply, the Bank of Japan was forced to change its policy. It increased interest rates and began stepping back from its ultra-loose monetary policy. This move eliminated the profits that investors were earning through the yen carry trade. Investors began closing their positions all at once, causing turmoil in the markets. History seems to be repeating itself. Just like in 2007, when the early signs of a global recession brought an end to similar trades, in 2024 too, Japanese investors started fleeing towards safer assets, and the value of the yen began to rise. This impacted Japan's monetary policy and its economy. The policy that was once its strength had now become its weakest link. During this same period, India made a major leap on the global stage. In a meeting, Niti Aayog CEO Subramaniam announced that India had officially become the world's fourth largest economy. With a GDP of $4 trillion, India overtook Japan. This wasn't just a statistic, it was a major psychological and strategic victory. For Japan, this was a warning bell. According to analyst 𝐮𝐩𝐥𝐵, Japan is caught in a double crisis. On one hand, it needs to control inflation. On the other, it must stabilize its currency, the yen. If it lowers interest rates, the yen weakens and capital starts flowing out of the country. If it raises interest rates, domestic investments and spending take a hit. 𝐮𝐸𝐥𝐵 believes that the old strategies, such as 0% interest rates, large-scale bond purchases, and deliberately weakening the currency, have now become poison for Japan. These very strategies supported Japan's economy for decades, but today they are dragging the country backward. And this isn't just Japan's problem. It's a warning for all nations that have long relied on cheap liquidity and excessive borrowing. The principle of leverage is simple. The more the borrowing, the greater the risk. And today, Japan is collapsing under the weight of that risk. The changes being made to the Bank of Japan's monetary policy are also affecting international markets. Investors who profited from Japan's cheap debt are now anxious. Market uncertainty is rising, and it's having a direct impact on foreign investment. Another serious aspect is Japan's rapidly declining population. The number of elderly citizens is increasing, while the younger population is shrinking. This has affected Japan's production, consumption, and labor market. The demographic imbalance has severely impacted the country's efficiency. A nation that once led the world in technological revolution is now grappling with a shortage of workforce. Its impact is now becoming visible on the social structure as well. The younger generation is reluctant to take risks, investment tendencies are declining, and a sense of uncertainty about the future prevails. While countries like India and Vietnam are advancing rapidly with the help of their youthful populations, Japan remains shackled by its past strategies. The Bank of Japan now resembles a player trying to block the ball on one side while goals are being scored on the other. It is raising interest rates to control inflation, but this is affecting both consumer spending and investments. It is strengthening the currency to protect it, but that is making exports more expensive. Analysts around the world see Japan's current situation not just as an economic crisis, but as a result of strategic missteps. Relying on ultra-loose monetary policy for decades, maintaining the status quo, and failing to adopt new global economic trends, these have now become dangerous for Japan. Now the question is, how will Japan escape this whirlpool? Will it bring about a radical policy shift? Will it attempt to reclaim leadership in the tech sector? Or will it embrace a slow economic decline? Experts believe that Japan must completely revise its economic model. It needs to adopt a realistic interest rate policy, introduce flexibility in its immigration policies to address demographic imbalances, and promote technology and startups with renewed vigor. This is a turning point for Japan. If it doesn't reform itself in time, it may slowly vanish from the global economic map. And this won't just be Japan's story. It will serve as a warning to all nations chasing cheap liquidity, outdated models, and short-term profits.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.